Good morning. It is 8:15 UTC. Apologize for my voice a little bit. I'm a little fluish. But in any case, the charts wait for no one. Looking at the local stuff going on this week, we are at the end of Q3, the end of the trading week of September. So, uh, not a bad amount of data coming through. Quite a bit of important things happening. Consumer confidence, new home sales. Thursday is when stuff starts ramping up. We got Powell speaking. We got GDP data. All this stuff coming out an hour before the market opens. So expect some volatility going into Thursday and Friday, especially pre-market. And then finally, Friday, the important thing to remember here is that Q3 options unlock this Friday. So that's a lot of free capital. So I think that's going to really set the tone, right? We're getting into Q4 next week, and I think it's going to get pretty wild. Hopefully, we're looking for Q4 going straight to the moon. That's the overall stuff to look for this week. If we look at the long short ratio, overall pretty short, pretty dead weekend for Bitcoin overall. However, in the local stuff this morning, we actually had a pretty sizable move to the upside as people were trying to short the open. Shorts increasing pretty heavily overall. We're still net short on accounts just on the Binance side, which is good. However, we are seeing some long stepping in as we have some localized breakdowns. So again, incentivizing, maybe we rip that local high leverage liquidity right below like the weekend structure, and then we have a continuation, but we'll go through it. So right now, not the best. We don't want to see long stepping in. It just means we'll probably have a little bit more downside before potential upside continuation. Looking over at the funding rates, generally not bullish overall. It's actually just switching now. It actually doesn't look too terrible in all honesty. BitMEX even coming in as possibly negative. So still looking generally good to have an upside continuation, not an incredible amount of short incentivization. So to read this very simple, positive means long, short-term incentivized, negative means long-term incentivized. So overall, neutral, slightly good, maybe if you're looking specifically at BitMEX. OKX, very, very positive, so that's not a great one. But in general, we're kind of sitting middle ground, not really benefiting either longs or shorts. Looking at the weekend, or I guess today's open, we do have a pretty decent amount of longs that came, or shorts that came in back at the highs at 65K. We also have some much older liquidity. This is the last 24 hours. If you look from the weekend outlook, including, Saturday, Sunday, yeah, we had that move up, grabbed all the localized shorts, punished the late shorts before having to move back down. There's a decent amount of liquidity from about 62.4K all the way down to 61.5 before it starts to thin out locally. So if we do have some continuation downside and we can get below 63K, I would definitely want to test and look at 61.5. On a higher time frame perspective, just to kind of understand where we are in general liquidity, there's still definitely enough to go higher. There's some local stuff that could do some retracements, but until we start losing structure and upside trend, which would probably mean we'd have to lose 59.5K, the stuff below us, 57, is not really targetable until we actually break the upside trend, which is still going. And then on the highest time frame, just to have like general outlook on where all the liquidity is. Yes, there's still a ton to the upside. There's still a ton above us that's local and older. So to say that we can have an upside continuation to 67.2K, absolutely. If we go straight up now to 67.2, I would actually expect we see a localized top, which is good. We're creating higher highs and higher lows. However, we would then look for some downside and some potential consolidation. If we go down first, it kind of reinforces the idea that we might have a pop back up. Looking over at the commitment of traders report, big switch coming in on Friday from Tuesday. So lots of asset managers, institutionals pulling their longs. Now this doesn't necessarily mean the price is going to go down. Very often this means that this is a capitulation move for asset managers. When they usually close out their longs, that's usually when we're seeing localized bottoms. Same thing as when we see other reportables. At the same time, this is happening, the old switcheroo, where 7,000 more long orders are coming in within that same period. So in my opinion, this is still bullish for general upside continuation. And this, along with like the Bitcoin ETF options, I don't think people are ready for what's possible right now. I mean, you could be seeing the same example of Bitcoin ETFs, what happened with gold ETFs. It's a very possible situation, especially since there's such a restricted supply of Bitcoin. Anyways, I won't go into that. Looking at the localized price action, going to trading light. We've got some on the book side. Yeah, not so much. We actually flushed out those local shorts that were holding the upside to the down. We've got some stepping in right now locally. Again, nothing too crazy happens until we start getting about 61.5 to 62K, where we have a couple hundred large size orders. I would expect that if we break 63, that we would then start revisiting 61.5, at least locally. I would want that before we go higher. It just means we have a more natural upside potential. Also, in this upside drive that started late last night, early this morning, lots of open interest, lots of short liquidations, and even now we're seeing some longs getting punished as well. So you got some localized downside. We've got some localized loss of level. But in general, it looks like upside is still on the menu. Looking at the footprint, when we do start breaking down, when we start talking about what's really achievable, I mean, 61.5 is a pretty decent imbalance that we would want to potentially target if there's some local losses at 63K. To the upside here, obviously, the real short was way early this morning before I was even awake. Really nice, basically, attempt to break out trade of longs, followed by a basic reversal from shorts stepping into basic to punish. And that's the big thing. So there's still quite a bit of long liquidity left that's going unpunished to the left of us. If we have some furtherized breakdown, I'd expect we'd have a significant move down from the weekend price structure. Where that would look like would be somewhere like, I don't know, 0.7%, potentially down to 61.5. We're really looking at those 0.7 to 1.4% moves. So overall, still looks pretty decent. We're losing the local TPO as well, with the next one pretty much 62.9, 63K. And if we lose that, where would we expect price to come back to? Yeah, probably 62, 61.5. There's stuff to test lower. But again, it would be healthy. It wouldn't be the worst thing. Upside is still the most likely. Finally, getting into trading view. Right, since it is Monday, we'll go through the liquidations just because it's important. The weekend high leverage liquidity, 61.7 to 62.3. So if we, like I said, if we do have that localized breakdown that comes into a liquidity dead zone, which there is one, we would then want to see some regain and some reversal back up, start attacking that local, old short liquidity, which could easily get us back to 67.2, 68K, as there is still liquidity to the upside. However, it is important to note we're taking out the 20x and 10x shorts that have been building over the last couple of weeks. That being said, where's the majority of the higher leverage local liquidity? It is below us. So if we do have failures now that fail to regain the lows, there's definitely enough high leverage long liquidity and large areas of long liquidity below us that we could target. Until we actually start breaking down, your brain still needs to stay up until we lose stuff. The first major loss would occur at 59.5. Losing that low would allow us to then target much lower. However, the one that really breaks the structure is down here around 58K. The loss of 58K effectively loses the upside range, effectively breaks the upside trend, and you are targeting likely 54K and potentially lower much lower is still possible. Until then, until we actually break stuff, the upside is still likely. We still have a good amount of old short liquidity above it that we can target. Looking over at the TA for this zone, general kind of plan. I'll zoom in so we can make this all fit and look good. There we go. So yeah, local stuff, very simply, the upside continuation is likely if we see a regain of the weekly open. Until the weekly open is regained, you're in a localized little range between call it 63.5 and 62.8. So you've got a nice little range. You got all the previous weekly opens, all the daily opens between these zones from the weekend until we see a localized failure, losing 62.5, losing 62.7, July Q3. Yeah, you're still looking to target higher because you're technically still making higher highs and higher lows. So that's the loss there that starts to break some local stuff. That's a nice point to where if we get a really good retest at 61.5, potentially even lower, and then a regain that regains structure and levels, you're looking at general continuation. If we lose this and then lose May, 60K, 60.6, that's when we start talking about breaking down and going lower. If we have these moves down, we want to do them sharp and painful with really nice, strong buybacks. If that's the case, then there's a very likelihood that you're seeing a local liquidity grab of longs as people, attempt to long into a new low, really quick, really painful, and then grind back up. That's what we've been doing so far. That's what I want to see. And for the time being, until we break down, that's still the general direction. That bias goes on its head the moment we start losing stuff at like 59.5 and 58K. If we start losing those things, we have to change our bias. But until then, the upside's still ripe. It still looks strong. We're going into the last week of September, and September's surprisingly looking quite strong on the month. The higher time frame is really simple. If we start closing above like 65.5, that's the target by end of month. If we can close above 65.5 by end of month, you've got a bullish engulfing monthly candle. And no matter how far we go deep underneath that after the case, the likelihood of us having a very strong upside continuation in Q4 is there. So that's that. I'll leave it there. That's the Bitcoin update, and I will catch everyone tomorrow. Peace.